I'm Jamie Seeker, and this is What It Takes. Each episode, I sit down with real business owners to talk about their journey, the wins, the challenges, and everything in between. Let's dive in. Hello, everyone. Today on What It Takes, Business Owners Tell All, we're diving into the powerful intersection of tax strategy and business growth with someone who knows that accounting is way more than just compliance. Our guest is Seth Kamens, a New Jersey and New York-based CPA, pretty much 30 minutes outside the city, and the founder of Kamens Associates. It's a full-service accounting and consulting firm headquartered in Livingston, New Jersey, and Seth brings an incredibly unique background. He's worked at firms like Morgan Stanley, Merrill Lynch, Deloitte, and now leverages all of that experience to guide startups and small businesses through complex financial decisions. His team helps clients move beyond basic bookkeeping and into a space where numbers actually support strategy. So whether it's tax planning, entity setup, or proactive financial management, Seth's firm is all about collaboration over compliance. So if you're ever worried or wondered how your CPA would become one of your biggest growth allies, then this one is for you. Seth, welcome to the show.
Thanks so much. That's about as nice an intro as anyone's ever given me, so I appreciate that.
I know,
No,
I like
thanks
to
so much
butter you
for
up
making it
before we
fun.
get started. So it
I
just
appreciate. It's a high bar to hit. No, I appreciate. It. It's great to be here, Jamie. Thank you so much.
So let's start at the beginning. What made you want to start Kamens and Associates? I'm sure that wasn't the beginning of your story, but at least the beginning of your CPA firm. And then like what gap did you see in the industry to make you want to say, "Hey, I think we can come in and make a big difference here."
My story is a little unique. This was not part one. This was not the first choice or the second choice or even the third. I started off down in college and grad school down in Washington, D.C., and wanted to live and work in that world, and it didn't pan out. I moved back to New York. I tried a couple things. Again, minimal success, not really enjoying where I was going with my career. Ironically, around 2010, I ended up getting sick for about 6 months.
Oh, wow.
Yeah, it's an interesting story. I caught what was called the H1N1 virus, the swine flu, and I had to move home. And I came to the realization I hated working for people. I didn't like the way they treat, especially in the Northeast of New York, New Jersey. It's a pretty cutthroat industry. It's a pretty cutthroat area. I never thought that was necessary to run a company. So after I finished my CPA exam and I worked for a smaller firm for about 2 years and decided I had had enough. I left the firm, reached out to every single person I knew on Facebook and LinkedIn, because at that point, Facebook was, well, a lot more popular than it is now, personalized every email, and got about 6 clients. And that was the precursor for all this. I had some help. My father is a tax attorney, so he had some clients. And what I really realized was that my strengths were never going to be utilized within big companies. And if I could survive the first couple of years starting to practice, I thought I would be okay. The idea of where this firm has gone was never in the plans. It was never meant to become as large as it has and continues to grow. So that's the beginning. That was 2012. Without going into grand detail, I had a partner who I grew up with. We were friendly. I started sharing some clients with him as I brought in more and more and started trying to find little niches that were not being utilized or not being given the same service that they should have been. They were either being incredibly overcharged by big firms, or the mom and pop practices didn't have the background to do this kind of work. So we started kind of veering in from there. And in 2016, we took over a small practice in Livingston, which is about a half hour west of New York City. We grew from there. And that was two of us sharing an office, probably no larger than the office you're in right now, and an admin. And 8 years later, 9 years later, there's 25 of us. We have clients around the world. We handle billionaires, millionaires, people that make nothing. and it's the industry, the firm continues to grow.
That's amazing. And you've worked for some of the most respected financial firms. What do you think you pulled from there, like lessons or, environments that you were in that you kind of carried into the practice now?
I learned how not to treat people, is the best way to put it. Is when you work at firms like a Deloitte, like a Morgan, like J.H. Cohn, now Cohn Resnick, you typically what happens is the pressure from the people above you is so significant that they're receiving from either the clients or from their managers or their partners, because everyone's trying to move all the way up, that everything is pushed down to the lower tier. And it's what happens is it doesn't lead to a cordial environment where you can learn and grow. So that was what we learned from a management standpoint. But also typically when we're dealing with clients, part of what we try and reflect and try and get across is that we're not just the tax return that you're going to call us March 4th, send us paperwork. Now, if that is what you want, that we do that, but you're not going to get, you can't have it both ways. You can't call us once a year and then expect the world in return. So it's a question of really learning how to work with people. It's soft skills. Soft skills are not treated, are not reflected well at big firms. And I learned this from my father, who's a tax attorney who runs his own practice. And what he had told me, because he was my first mentor in starting this, was no one's going to know what's on page 120 of a tax return. They're going to know if you call them back, if you respond to them, if you treat them with respect. And I've tried my best, and as we've gotten larger, it's obviously not as simple to do, but I've tried to hold to that as much as I can.
Yeah, I think it sounds like such a small lesson, but it's actually a really big deal. And when it comes to customers or people, clients, when I'm on the receiving end of it, that kind of helps me make a lot of my decisions is who's responsive, who do I feel I'm connecting to. And that kind of leads me to I think we work with a lot of small, medium-sized businesses, and I would say that most entrepreneurs only talk to their CPA at tax time. But I mean, just like you're talking about right now, you advocate for more of I'd say, strategic partnership, strategic
Well,
relationship, right?
that's like every industry, it evolves.
Yeah. So
At
what does
one
that look
point,
like though? Like in real life, how does that look?
it's the way I try and explain it is I'm not going to bill you for a 5-minute phone call. I don't see the point. It's all it's going to do is have a negative connotation on you as the client. And what it doesn't allow us to do is help you. If in March hey, everything is sent to us, or February, here we are. Well, that we could have set up the right retirement plan. You're in the wrong entity structure. Are you doing the P10? All these, now again, this is more jargon than anything else. Are you set up correctly to succeed? If you're saying, I just want to talk to you once a year, well, I don't have the time nor the energy on March 8th to have these discussions. So what we try and do is say, look, let's have a meeting twice a year. You set the agenda. If you want me to do a deep dive or a firm to do a deep dive, we can do that. But at a minimum, let's have a 15-minute phone call. There's no real harm in it. The price is de minimis because people always are concerned, well, are you charging through the roof? I tell my clients what I'm going to charge them 90% of the time before we even get started. So you have a feel for what it is. And when we exceed that number, typically there's a discussion that's had, unless it's so extraordinary that both sides understand it. Because the biggest problem is 20 years ago, it was, hey, here's your tax, here's the paperwork, here's your tax return, we're done. But just like every industry, we are brought in on a lot of things. We're brought in on cash flow. We're brought in on what should we be spending on X or Y. Is the retirement correct based upon the entity that we're in? Is the entity correct? Should we be filing in more than once? These are not 30-second questions. These are things that you prepare for And because of that, it allows you to grow strategically. Now, if you are a business that's doing $100,000 and your goal in 10 years is to do 110, then the value add isn't really there. If you're at 100,000 and you want to do 500,000 in 3 years, then you're going to need assistance from somebody because nobody can grow it that quickly. Or if you're growing it that quickly, you don't have the back office to help you. Because at the end of the day, the goal is what you net. It's not what you gross.
Right.
So that's kind of where our thought process has gone. And when I started the practice, one of the things that I never thought was really looked into very well was these solopreneurs, because no big firm is going to handle them. And the small practices aren't giving them the time that they need. So what I used to do is I would go to these networking groups, these incubators, and I'd meet up these startup clients. And it was myself, and it was Price Waterhouse. And it was great because you're going to it was a very easy sale because I wouldn't talk about price. I would just say, look, you're getting a staff one from Deloitte, or you're getting someone who runs their own company. Your choice.
Yeah, that's great.
And it's once, as long as you kind of make what you're trying to articulate clear, typically people will gravitate towards it.
And you talk about being proactive, not reactive. And I think when you have people that you just have to reach out to all the time to get what you need, it's a much different experience than somebody who's kind of like coming after you. So, what are like key moments in a business owner's year where a CPA really should like be involved? Because I know what my experience is and what it has been. And I think it absolutely makes a difference when you have more of a proactive advisor that is kind of coming after you and saying, "Hey, here's some things that we need to talk about." It helps me to get into my mindset of, "Oh yeah, I think yeah, let's have a discussion about that. I don't want to wait till the last minute."
Right. It's contingent on what is going on within individually, business, trust, whatever we're talking about. For a business, we try and do it semi-annually or quarterly. We just don't do it during our busy season because it's impossible. And I can't give you the time that you need.
Yeah.
Nobody wants to have a conversation with me on April 9th. I'm miserable, as every other CPA is. So it's okay. Do we have the chance to buy a practice? We have the chance to expand. We have the chance to sell. Okay, our net income is higher than it should be. Do we want to be spending more at the end of the year to bring it down? It's all that's from a business perspective, from a personal. If I'm buying a house, what is the impact? If we're getting divorced, what is the impact? Well, typically, when there's big events that happen
Mm.
that are deemed significant to you personally, business-wise, whatever it may be, you need someone to speak to. And what I advocate when I'm speaking to a company, my first discussion is you should have 3 or 4 people that you intuitively trust that are not in your industry that will say no to you and will tell you you're wrong. And I have, being somewhat loud and blunt, I don't really have that problem.
I think that's really good advice, though, because one of the things that I think I've experienced on the receiving end is I actually don't know a lot of what I'm talking about when it comes to I'm getting into the tax field. You know more than I do in that area, right? And so I need somebody to actually give me some pushback. I might have some goals that I want you to help me achieve, but the how, you need to tell me how to do that. Like I don't know really what I'm talking about when I say,
Right.
well, I want to do, X, Y, and Z. I really need somebody who knows what they're talking about, who isn't afraid to tell me, hey, so what does that look like when you're working with clients and you're creating process or internal systems that make managing their finances more efficient, less overwhelming? How do you go about doing that once you have that relationship and you have that kind of communication?
It's about simplification. When you're starting a business, nobody knows what they're doing. I didn't either. I learned by trial and error and by working with clients. It's sometimes it's as simple as set up a QuickBooks account for your bookkeeping. Use one business credit card. Have a separate bank account. It's as simple as that. And I don't want to, people don't want to look at their numbers. I tell them, do it once. We will show you how to do it. Do it once a month while you're watching a movie or watching a football game. It doesn't have to be perfect, but it gets you in an idea of where you're going. Because the biggest problem people have is, I'm a real estate agent. Perfect example. Client does commercial real estate in the city. They were making 125,000 a year. They were writing off 30%. They're at 80K. The next year they go up to 400,000. I don't know if they go to 400,000. I find out a month before. It's not being handled correctly. You're not setting it up right. And suddenly you can't afford, because you've been spending, you can't afford to make the payment. And then you're going into the next year, and the next year is a down year because of COVID. I'm just kind of giving a basic example. And suddenly you have this $40,000, $50,000 bill that you can't pay. And the interest is coming and penalties are, the idea is not to be perfect. The idea is to get you in the ballpark, to get you in what happens. And this is obviously a client of mine that this happened to, where 4 years later, they're 60,000 in the hole. And the IRS won't set up a plan because it's over 50. So the amount of information isn't. Now it looks like it's going to be remedied in the next 3 to 6 months. But this were conversations I had. This happens to be a friend of mine as well. These were conversations that I had along the way. They just didn't go anywhere. And I can't push someone to do things. Sorry, I went off topic a little bit. But the idea is, when you are, especially in an industry that you're starting, or where you don't have annuitized income, for lack of a better term. I know my business does 100 for what I do. We make 1,000 this year, we make 1,100 next year, we make 1,200. We're not, because we're annuitized, most of our clients are going to stay. Some leave, but most stay. And the rates may go up slightly, but not enormously. I know this intuitively. But what if you're in an industry where it's not, and it's project-based? My wife runs a company she runs a market research firm. She has years that are good, years that are not good. And the idea is to kind of make sure that in the years that you're good, you're kind of under. Now, she's married to a CPA, it's a little bit easier, but you need to be able to stay within control of your business. And that was something I learned early on. Because once you're not in control of things, and I'm not saying you need to be to the penny or to the dime or the dollar or even to the $1,000. You need to be in the ballpark. Yeah. I have partners who will do it to the penny. I'm not built that way. I'm not a CPA in that capacity. We spoke before, I kind of see myself as an entrepreneur who happens to be a CPA. So I think of myself in that realm. And that's how I advise. My partners do similarly, but I do more high level. They do more in the weeds.
Well, I'm really glad you brought up that story though, because even though you kind of said it was off topic, it was actually right into what I was kind of trying to get at, is that that is not a unique story that I think you just
Oh,
told. That's something that actually happens to business owners. And like I said, I don't have just one client. I can't just count it on one hand that this has happened to. Now, I am not in those areas, but I have been in areas where, we are helping manage finances, and because they didn't, like you said, we're not tax advisors. We do not go into your QuickBooks and like write the check. We're not in there doing your withholdings. We're not in there making payments or anything like that. So if you as a business owner, like at the end of the day, it's your name on the business and they are going to come after you. And so we can only do so much to get you there. So you have to make sure that you are receptive to people that are trying to help you and tell you we have nothing to gain from saying, hey, make sure that you're paying your taxes, like other than, like I don't,
it's
it's just a thing. Like we're not trying to make you, spend your money the way that you don't
People
want to do.
forget these are businesses.
Yeah, yeah.
A lot of times it's about look, there's revenue generation and there's savings on the other side. And both of them are mandatory to run a successful business.
Yeah.
And if you can, when you're starting, the back end stuff is much more limited. And we try and guide you there and help you do it. Because if you're going to pay us to do it, the expense is more valuable. The expense is a lot more valuable when you're a year in than 5 years in. When you all you want to be doing is the work and the business development to bring in clients. But in the beginning, it's all about keeping your expenses low and being able to control. If you can control it the first year or two, then it's a little bit easier to guide. Okay, we can expand to this, we can expand to this. And we've done this within our business. We've made incremental growths, incremental acquisitions. We're expanding what we're going to be doing within Kamens as a whole, as we've got, but we're also 6, 7, 8 years in, and we have the ability to do that now.
Yeah, I think that's really good advice is growing incrementally and taking on some of the things that when it's appropriate. So, what are some other things? Like this is our signature question that we ask every single guest that comes on the show. We're talking about business owners telling all and really about what it takes. So, in your experience, you talked about I think some really key things that could really help, but what does it take for somebody to kind of step into this role and be successful at it?
I think you start off with the easiest one. You need what we call chutzpah, which is you need guts. And I am in favor of everyone taking a shot on something, as long as you have the background to do it. I go back to my wife, started a company before we were dating, and she realized 6 months in, I made a lot of connections for her because one of the things I always try and do for my clients is connect them with people who can help them. I've never understood why people don't do that more. She decided it was not the company for her to run. It was a good idea. It wasn't for her. 2 years later, she went back and started a company based on market research and brand strategy, which is what her background was. She was equipped to run it, and she's run it beautifully. So that is important. I think you need emotional support. The financial is nice and obviously helpful, but there are days, especially my first 2, 3 years, where I'd be up 12 o'clock at night pacing back and forth whether I can make this work. Luckily for me, I have a family emotionally supportive, understood why I was trying to do it and pushed me to do this. I had a girlfriend, now wife, who was all in favor of me doing it and was doing it in conjunction with me. And I had a business partner, even though he was part-time at that period of time, who had absolute and utter confidence that we could build this practice. Now, we've joked about this over the years. I did not think it would become this and will continue probably to grow. He always had confidence that it would, which is both fantastic and flattering. But the idea being there was support there. So those were the things that I always thought you needed. I also just think you need a basic business background. I think unless you have people who can do it for you, who will do it, who will do it at such a minimum price. But forget even price. You need people who have done it, who understand what it takes, and it will help guide you there. Hence the 3 people I was talking about before.
Yeah, I think that's really good. And I don't think anyone's ever brought up that piece of it is to have professional and personal emotional support. I think that's really, really good advice. And something that I've seen kind of across the board is you're going to experience things where it's going to affect you financially, it's going to affect you, your
Yeah.
strategy and problem solving and business, but it's also going to affect you emotionally. And having that support there is sometimes what can make or break some of the most successful entrepreneurs. So I think that's really good advice, Seth. I'm so glad that you came on the show. I feel like this isn't your typical CPA. Most of them are black and white numbers, numbers on a spreadsheet. But he is part tax strategist. What else did we talk about? Growth
Art psychologist.
partner. There you go. Oh, psychologist, systems builder, all those things. So if you want to stop seeing your taxes just like a deadline and start seeing them more as a tool, then you know who to call. That's pretty much what I'm taking from this segment here. So, Seth, where can people find more about you and your team?
I guess like probably by the time this is actually posted, we'll have a new website. But Kamens, Kamens, CPA.com. Anyone can link in with me, Facebook with me. Um, and or you can just go to our go to I guess we have, as I said, Twitter and all that. I'm not My industry, as we talked about, is not exactly social media friendly, and I have specific reasons which I try to kind of avoid it. But but typically CPA.com is the easiest way to find us.
Yeah, and we can put all that in the show notes as well. So if
I
you loved
appreciate it.
today's episode, be sure to subscribe, share it with the entrepreneur in your life who would love to have a little more clarity, a lot more strategy. But until then, we will see you next time on What It Takes. Business Owners Tell All. Would you or someone you know like to be featured on this podcast? Our applications are now open. Apply today at seekersolution.com and click on the podcast link to get started.